You're watching Famous Dave on YouTube.
You know, I love reading the forums about on the GameStop forum because they're hilarious. People just sit there and come up with the most outrageous things to say. And one thing that's kind of annoying, however, is that it seems like every other post at least is somebody tagging GME and AMC to pump their unknown stock or sort of the stock of the day. For example, yesterday was COS. COS was bid up after the close, and people were saying, oh, COS is up after the close, must be GameStop and AMC's time next. The other thing people were saying, will continue to say over and over again is, oh, my stock, come on, guys, jump on this stock. Let's do like we did with GameStop and AMC. And, you know, when you think back to the beginning of the year when these two stocks got bid up, it was could be seen as like all these people getting together and manipulating a stock, right? Which is pretty much the same thing that everyone is accusing hedge funds and market makers of doing. And a lot of the messages that people put up are saying, come on, guys, let's get together and manipulate this stock in this way or that. And it all kind of comes back to the evil market makers. And in my opinion, people give market makers too much credit. I see these posts saying, oh, the market makers decided they're going to do this, and they made 4 stocks go down and 1 go up. Now, so I just like to revisit this kind of idea of a market maker moving the market or making stuff happen. Now, if you have enough money, of course, you can have some effect on things. And certainly, many people have watched this video of Jim Cramer talking about how when he was in a hedge fund, he was able to move stocks by spending several $1 million in one direction. So, for example, he was saying, you know, I spent $5 million to sell a bunch of shares of the stock, and then once I had done that, other people sold it as well, and I was able to buy the shares back at a cheaper price, and thus I was able to manipulate the market. Now, I'm not suggesting to you that that never happens, but I would suggest to you that that's rarer than is being shown here, A, and B, trying to do something like that has its own risks that are that go along with it and doesn't always work, right? The danger is that you can always run into someone bigger than you, right? Nobody in their right mind is going to try to sort of pin a stock like Apple or spend a bunch of money to try to move the price of a stock that's heavily traded, because you never know when you're going to run into someone bigger than you that's going to put a damper on things, right? If you spend $3 million to make a stock go down $1, and you happen to run into a big buyer, that can go right in your face, right? The stock could move up against you, and how much money do you continue to spend before you either run out of money or well, just basically that, run out of money. At some point, you can't just keep selling a stock only for the reason that you're trying to manipulate it lower if it starts to go up against you. So taking those sort of risks by a hedge fund is actually having risk in the marketplace. But certainly, it's not a fair playing field in the world, in that the people that have more money have more power. Now, that's true in any sort of business, anywhere, and it's true with trading as well. I can speak about this because as a market maker, I worked for a firm that had usually more money than the other people around us in the pit. And so I could push people around a little bit. And I could afford to not make money for a period of time to push others out or push them around. But I wanted to talk to you today just a little bit about some of the phenomena we've been seeing with GameStop, and this is going to apply to other stocks as well. And this is not a an argument to be long or short. This is just kind of psychology of the marketplace right now. I'm not interested in convincing you to have some sort of position one way or the other in GameStop or any other stock. It's not of interest to me what your position is. It's more of interest just trying to help you understand some of the psychology here. So let's zero in on the last couple sessions here in GME just to take a look. And we can see this morning stock bid up. Right here, when we look at this chart, what does this information tell us? Well, we see it says here 180. Now, is 180 the last price that this traded? Well, in this case, if we look at the time and sales here on the right, the last price it shows here on time and sales is 179.10. Now, that isn't necessarily the last trade that happened in this stock. The time and sales for Thinkorswim is bought from a data service, and it doesn't always represent every trade. It's a sampling of trades, right? So there's not every trade here that happens during the day. And why does it say 180 on the screen here highlighted, and yet the last trade here is 179.10? Well, that's because only trades above or 100 shares or above are reflected on this chart here. That's why you see these gaps in prices. Now, it's not that nothing traded in between these prices. It's that no lots of 100 shares, of less than 100 shares. No lots of 100 shares or more traded at these prices. So smaller trades are not being reflected on this chart. And I think that's just, it's basically a way for Thinkorswim to save a little bandwidth and money, and that they don't need to report every one lot that trades, right? And in a sense, it's more important to someone as a trader, the bigger trades anyways. And I know that you can, on your feed here that shows time and sales, you can adjust this feed to not show you these smaller trades as well if you like. In fact, you can adjust this feed so it will only show you whatever level you want. Prints of 1,000 shares maybe minimum. However, once again, this doesn't pick up all the data. So if you want it to show you only the 1,000 share trades or above, it's probably going to miss some of them. I noticed that it definitely misses bigger trades a lot of the time. So I just leave mine on the minimum right now. For one reason, because it helps me stay in touch with whether Thinkorswim is actually online, disseminating properly. If everything just stops and freezes on the screen, then I know that it's not updating right. You can see it kind of blink over here on the list in my watch list, but seeing time and sales move is another way for me to quickly tell if I'm actually online or not, because this thing goes on the blink very often. So let's look at the action here this morning and just comment on it for a second. So if I go to the Analyze tab here, I can see how many shares have traded in GameStop so far today. We see 13,000 shares, which is not a lot. Earlier today, however, this starts trading at 4 in the morning, and I looked in on it at 4 in the morning, and not only, in the first couple hundred shares that traded, the stock was already up $2. So when you see a stock move on a very small amount of shares, that's going to tell you a couple things. A, it's going to tell you that there's not a lot of liquidity here, right? At 4 in the morning, there's not a lot of sellers or buyers in to make a market. And we can see with GameStop, we know a little bit about the people who are trading this, and the enthusiasm from smaller traders about this stock is reflected in how stuff is trading, right? You see a bid many mornings for, right away, as soon as the market's open, 4 in the morning. Most retail cannot get access to the markets at 4 in the morning because a lot of these retail programs will not give you access when stuff starts. In fact, you probably have to wait till, I'd say, 7 o'clock is when the ball really starts rolling for some of these bigger brokerage firms when you can actually trade. Even though the market's officially open at 4, I think Interactive Brokers starts at 6. not a lot of retail can get access to the markets before 6 or 7 in the morning. So, however, this phenomenon of people, just wanting this to blast to the moon is out there, and thus, when you see the price moving like this without any shares trading, that's an anticipation of this phenomenon, and um, this is the market makers fading. We call that fading. When somebody, when somebody wants to buy from you, you get out of the way. That's the way it works. And as a market maker, we try not to have emotion in the way we do things. The reason I can speak to this is I was a options market maker for many years and a trader for many years as well. I started in 1994, but you don't know as a market maker when you see someone bidding something up. You don't know if that's for 100 shares or 1,000,000 shares. So the best thing you can do is to move out of the way, right? So you can see that happening here. Without hardly anything traded, somebody came in and bid. And even though it was a small bid, people get out of the way because they don't want, because that's how you discover price, is you move out of the way, regardless if if you're bringing emotion into this, and let's say you are short, you might be all frazzled and say, oh, I don't want the price to go up to 184. Oh no, that's beyond my break-even price, or I don't want it to go to 190. But as a market maker, regardless of what your position is, if somebody's bidding stuff up, you need to get out of the way. And when do you stop getting out of the way? Well, when some other customer who's not a market maker comes in and wants to sell, right? So you can see this ripped up as high as, I think I got up to like 180, 150 earlier this morning. And if you're a market maker, you maybe you sell a little at each price, but then you just want to keep getting out of the way. Regardless if it goes to 200 or 2,000, you're going to get out of the way until another retail customer or some other customer comes in and wants to sell it there. You don't want to set price as a market maker. And this is kind of in opposition to a lot of what is being talked about with market makers out there in these forums. Market makers are seen as these people who, the puppet masters who are above holding the strings and manipulating everything, whereas the actual truth of the matter can be the exact opposite, in that people are looking to get out of the way and let the retail determine the price. Now, certainly, as a market maker, you might make trades at different prices and you might have an opinion on things, but you're not going to try to artificially hold the price anywhere, because doing that just gets you into trouble. You don't want to make a stand anywhere, because prices can always go higher or lower, right? So, and this can be true if the market is offering the stock. In this case, they're bidding the stock, but this can be true if the market is offering the stock as well. You see a couple days in a row here, we have this phenomenon of the stock being bid up on the open, but it won't last forever, because patterns, humans, you've heard this before, humans are very good at recognizing patterns, and you get a couple days in a row where this sort of the same thing happens. It's bid up and then it goes down in the afternoon, and people are going to recognize that pattern, and they're going to start to try to take advantage of it, and the pattern's going to disappear, right? If people see, oh, every day it goes up until 10 and then it goes back down, then as soon as 9:30 comes along, people are going to start selling it, anticipating it go down. And the next after that, 8:30, people are going to start anticipating that it's going to go down. And thus, you don't see the same pattern over and over again every day in a stock. In fact, it's very, very hard to predict what is going to happen in just one day in a stock. In fact, I would say it's impossible to predict what's going to happen just in one day in a stock, because the number of players that are out there, even just in a less liquid stock, is huge. And to know all the games and all the ideas that all these players are up to and who's going to be dominant in that environment is pretty much impossible. So I try to get people into this mindset that we don't know what's going to happen. If you're aware of the fact that it's impossible to know what's going to happen, that's going to help you with your trading, I believe, much more than having this idea that somebody out there is manipulating things and is going to act in a certain way. Now, if we did know that somebody was going to do something ahead of time and we could take advantage of it, that would be great, right? If somebody were manipulating things in a certain way and we could take advantage of that, then I would love to do that, right? Of course we would. I have no axe to grind about manipulation. I have no reason to they love this. People love these conspiracy theories, like, oh, people are paid to tell you one thing and then to try to influence you. When the reality of the situation is that the people who have most been trying to influence things are the people on the Reddit forums. If you look at so many of the posts, it says, come on, guys, let's all get together and do this. Let's make the stock do this or do that. That is what manipulation is, when you all agree to do one thing together. So be aware of that. We'll see what happens with this particular issue. It seems like GameStop's come back to life a little bit recently. We saw 2 days ago, we had this huge rally. It came back down, but we still are at a higher level than we were over all of last week. We had a low of 165 last week. We got up to 188. Now we're somewhere in the middle here. We'll see what happens moving forward. The volume has been pretty low, to be honest with you. It was a little bit higher that one day where stuff popped up, but the volumes hasn't been super high. The VIX has been mellow. VIX really operating in a predictable fashion here. We're showing the VIX at 1925 right now. If we pull up the term structure quickly, we can see contango currently 9.6%, and this is very, very typical, right? 6 days. So next week's expiration, and we'll start looking to the relationship between November and December instead of the relationship between October and November. And in the meantime, this is exhibiting decay, and we can take advantage to the downside of these VIX products. I am going to do a class on some VIX basics coming up this week because I know I've been away from that VIX stuff for a little while. I apologize for that. So I do want to go back and just run through some VIX basics, and the next video will be about that. So if you're interested in that sort of thing, stick around for that one. As far as GameStop, the position right now, nothing. I haven't made any trades in the last week, so I am still just short GameStop. If you want to look at the position here, I am long the December 160, 170 put spread 22 times, and I'm long the January 160, 170 put spread 9 times. So essentially, if we look at the Greeks for that, I'm short 168 deltas here, which is the equivalent of being short 168 shares of the stock. So still short GME. Wasn't particularly excited with the rally to 188, but we did come back a little bit from there. We'll see what happens. I did roll part of my position from December out to January. You can see here I have 9 lots in January and 22 lots in December. If we look here at the option screens, we can see that December expiration is in 65 days and January is in 100 days. So plenty of time left for this position to work. Not as risky as it might seem at first, in that there's a lot of time left, and but the risk here really is, and the difficulty of trading this position really is, that these prices don't update all that well, and it's hard to get in and out of these trades. So for example, my P&L for this position, when the stock was up at 188, it was showing me having more money than with the stock down here, down $10. And that's just due to the fact that these spreads have wide markets, and not much trades in any of those strikes at any time. So for me to get out of this position would be costly, and getting in is hard too. So it requires a certain level of massaging the position. We've seen the kind of the reverse of normal stocks in that as the stock moves higher, especially on those rip days up, volatility in these options moves higher. And so thus, when you do get that big up day, these spreads that I'm long, which it's showing a short delta of 170, 168, so you should lose money as the stock goes up. However, with a pop in volatility, these spreads really aren't moving hardly at all, with prices in this whole range. So basically, I'm along for the ride. The money doesn't really change very much. Regardless, here it would take a big move up or down for me to lose or make money. So in the meantime, I just kind of sit and hang out here, and I've just left the position as it is. If we do get a big move down, I might sell something against it, but for the time being, I'm just leaving the position on here. Anyways, that's what's happening in my part of the world. I hope you have a great day today, and I'll see you in the next video. Thanks for watching and for your support.